Good morning, everybody. It's Christopher from Serene Education with the 4 majors news update for the 31st of July 2013. Hi, guys. 4 majors morning, as per usual, looking at the indicator box at the bottom here to complement our strategy template, which is plotting a buy and sell arrow on the chart. We're getting as much confirmation as possible, utilizing all these indicators. I'm just going to start with the euro against US dollar, working our way through to the US dollar Japanese yen. So let's have a look and see on the euro US dollar on a daily what the outcome was. And yesterday you can see a lot of hesitation over the past couple of days. Yesterday in particular, spinning top, slight movement intraday, as you can quite clearly see. All this taking place, however, at a major support and resistance level in the shape of the 78.6 fib retracement on the daily. These dotted lines, the yellow dotted lines, represent my daily fib. And you can see the high that we saw back here in the latter part of June to the low we saw in the start of July. You can see that price has been tackling these fib retracement areas as the euro has found strength against the US dollar. However, near term, coming unstuck here near term, the good thing to know is we're trading above the monthly and the weekly fib retracement levels, which is a very, very good, strong indicator. As long as it maintains above these levels, then we should be looking for further upside movement. You can see we have a buy arrow previously and the candlesticks are blue. However, we have consolidation. If this is to be true sentiment upside, we would want to see the break of the near-term resistance level. So if I can just put that on the chart for you, you can quite clearly see we have had some action in and around the 78.6 mark. So primarily want to see a break and close higher than the 1330.25 mark to see price then tackling the prior high that we've just come from, or the highs that we saw for June of this year, which is approximately from this level to those highs. We're looking at about 114 pips and change. So as it stands at the moment now, a lot of indecision candles. We want to see a decisive candle. And yesterday's spinning top also not really doing us any favors as it's coming at this level here. So we want to see a decision, and we want to see a momentum drive candle, whether it be bearish engulfing. If we do see one, then we would look to tackle or look to target back towards the price support and resistance level here in the shape of the weekly fib, which also complements the daily fib. So we have them both working together quite collective here, which is also all the moving averages. If we do see a bullish engulfing candle move higher, then we wanted to close above not only the 78.6 but the current highs that these candles have been forging here at that 1330.25 mark. Looking at the indicator box, we're seeing a lot of negativity intraday, and the R-squared is complementing that negativity. So we know that there's true selling happening on our shorter term time frames. However, the long term sentiment is one of upside, and we have been moving higher. So moving higher but consolidative, hence the reason why the intraday indicators are all pointing negative. But if we see that momentum continue, then ultimately what's going to happen is we're going to see a bearish engulfing candle. So we want to see a nice confirmation candle. Here on the 4-hour time frame, you could see where price is trading right now. It's testing a price support and resistance level, and a lot of consolidation at this level over the past number of days on the 4-hour time frame. So we would need to see a bearish engulfing candle on the 4-hour breaking through. We had a lot of the 4-hour candles trading lower, but not one of them closing lower. Hence the reason why it's imperative that we see a 4-hour candle closed lower than this area here, which would constitute that this is a negative setup. Then it's breaking out of this consolidative range, and that would look to indicate to us we should be looking back towards the prior support and resistance lows here and the weekly fib retracement levels, as well as the institution moving average on this time frame, roughly around the 146 mark, 164 mark. So got to be patient, wait for the confirmation, and then we'll trade the outcome. On to sterling. Here again on the daily, you can see quite clearly just recently, nice little trade I took yesterday with the traders, and you can see quite clearly near term also resistance, and that resistance coming at a weekly fib here at the 38.2, but also the 61.8 on the daily. Okay, so you can see the massive fall that we saw recently from those mid-June highs to the current lows on the start of July. Nice bullish engulfing candle after Bernanke's announcements on tapering of the QE3, and we saw sterling rise against the US dollar. Moving into the weekly, or moving above the monthly fib here at the 23.6, which happens to be roughly around the 15,300 mark, which is a very strong support and resistance level for this particular pair. However, coming unstuck as we head into that institution and also into this weekly fib, not getting above it, and the longer she went sideways, the more likely the outcome was going to be one of negativity. And sure enough, We had a bearish engulfing candle 2 days ago, and that sentiment driving through yesterday back below the monthly fib, which is not a good sign. And now you can see on the Asian session, price falling even lower into the weekly, but also the daily fib area. So this is going to be a very strong support and resistance level, a very strong target intraday. You can see that the indicator box here, primarily negativity, and the R squared, most importantly, is complementing that sentiment. So it's telling us that the selling that we're seeing on the charts here is true selling. Okay, that's the R squared, represents true selling, and sure enough, there we go. I get a sell signal already on my 4-hour time frame. You can see on the 4-hour, everything is negative, and the R squared is complementing that negativity. So as it stands at the moment now, driving lower as we head into the weekly and the daily fib retracement here at a price support and resistance level. So in terms of profit, or looking for targets, there's 24 odd pips. So there's a lot of, if you're looking to trade now, it'd be very, very aggressive. You're putting a lot of risk on the table. So it's primarily, if this is to be further negativity, we want to see this near-term support and resistance level here being breached. Then you look for a more confirmed, more tidy trade down to those levels here, which is from your 38.2 daily to your 23.6 daily, which is 135 pips. More cleaner air once we get below this weekly low here. So I would put a alert, wait for confirmed break below that, ideally a daily close below that would be even better, even a 4-hour, wait for the pullback and then the trigger on the hourly. But remember, we have a lot of news this week, the next couple of days. We've got non-farm payroll, first Friday of the new month. So let's see if we can see any momentum coming from either the non-farm payroll figures out of the US or the interest rates announcements for sterling that we can expect tomorrow. We have a lot of news out over the next couple of days, so that could be a deciding factor. So moving into this price support area, we could see a bit of consolidation as we head into here. So if you're looking for any trades, rather stand aside, either wait for a bullish engulfing support here on this area, or bearish engulfing close lower to confirm where sentiment's lying. US dollar Swiss franc, excuse me. Price has been falling recently over the past couple of weeks after Bernanke's announcement on that QE3 tapering, and sure enough, we've seen a lot of selling as we headed into the weekly fib retracement here. However, at the 23.6, it's found support now. The past couple of days in particular, finding consolidation above this area. So remember, we've been through this area before. We had a breakout, but we didn't get any trigger candles like bearish engulfing, a nice candle with a lot of sentiment behind it. We had a lot of indecision on these movements over here, and subsequently when we saw the pullback, we never saw the continuation candle, and the continuation candle actually ended up being a reversal candle which took us back up. So here, if there's to be genuine negativity for the US dollar against Swiss franc, we would want to see a bearish engulfing candle close lower with sentiments. So a nice full-bodied candle, negative full-bodied candle below this level, and then we'd look to target the next weekly low, which is a good, from this level here to that, we're looking at a good 410 pips and change. So more than enough on the table to be made. The other outcome is the longer she spends time above the 23.6, the ultimately what's going to happen is you're going to see a bullish engulfing candle as people start looking for buying sentiment, and then we're going to see a reattempt of the highs we've just come from. Notice that the US dollar has failed on 2 separate occasions at this major monthly support and resistance level, at the fib level here at the 23.6. So very, very important. There's no trade at the moment on the US dollar Swiss franc because we are trading at a consolidation support. So not worth taking that risk. Rather wait for a confirmed break low or higher, and then look to see what the actual indicator box is telling you. So you can see here negativity reigns supreme on the longer term. However, we're seeing a bit of buying sentiment. That's primarily because we're consolidating now on our shorter term intraday. Last pair of the day, the US dollar Japanese yen. Here again, we've seen price attempting or hesitating or consolidating around the monthly fib here at the 50% fib retracement on the monthly. Price over the past couple of days, bearish engulfing candle has seen price falling lower. However, the momentum running short, and you can see the last 3 days in particular, and including last night's trading session on the Asian, very flat indeed. All spinning tops, dojis, not a clear directional candle. It's an indecisive candle, and therefore there's no reason to trade. We want to see a decision candle. If these are dailies and all indecisive, that means that the buyers and sellers out there are none the wiser. They don't have a true indication where they want to be. And when you see them on the chart, all you're going to see is price consolidating and moving sideways, which is flat, no return, waste of time, and no return in time invested. This coming pretty much close to the weekly fib here at the 23.6. There's not a hell of a lot from where apologies, I've got the wrong indicator. I'll use that one. There we go. There's not much in the shape. There's 99 odd pips, but you're talking a lot of risk over here in terms of pullback. So consolidation, we want to see a directional candle. If we do see a directional candle and it's bearish engulfing and it goes into the 23.6 and fails to close lower, there again you still need to stay on the side. As I mentioned before, we are going to see a lot of news over the next couple of days heading into Friday as we have non-farm payroll. It will be interesting to see if the US market news could reflect very heavily on the yen. You can see here quite clearly we have a bit of positiveness long term. However, the sentiment intraday or daily going into our intraday is very much one of negativity, but the R squared isn't complementing that, and hence the reason why we're seeing consolidation. The R squared has to be complementing it, i.e. being blue, and this is going to be red to be genuine. That's not the case, and hence the reason why price is going sideways. So on our 4-hour time frame, you should see a lot of consolidation. Look at that. No reason to trade that. Okay, if we do want to see a trade, we want to see a bearish engulfing candle close lower. And if you do get a 4-hour bearish engulfing candle close lower, how much is it eating into your profit before we start hitting these weekly support and resistance levels here in the shape of the 22.6 fib retracement? So rather wait for a confirmed either bounce, bullish engulfing candle close, full body bullish engulfing candle. That would confirm that we should be looking upside for the foreseeable future, or bearish engulfing candle close lower, primarily nice bodied one, and then look to see if there's any momentum we can trap into the 22.6. If it's too close, rather stand aside, wait for the break below the 22.6 on the weekly here, and then look to trade cleaner air down to our monthly and a weekly down below this level, which, as I mentioned, is a good 200, just short of 300 pips to the next level. So rather be patient. When you are patient, you tend to be rewarded a lot better. So in this case, price has been consolidating, no true direction, rather stand aside and wait for a confirmation candle. Other than that, that's it, guys, for the news announcement, the news analysis. Please look at the news, guys. Today in particular, a hell of a lot of news out. We are going into non-farm payroll Friday, as I mentioned, so we're going to see a lot of news. We'll have a lot of news out for the European sector today, Swiss as well. Then we have a lot of news out for the US session this afternoon. Canadian, we have the GDP month-on-month figures, which is very, very important. They're expecting a 0.1% growth on GDP for Canada. If that does come up higher than that, you could expect to see a nice movement for the Canadian dollar this afternoon against any of its counterparts. US dollar advanced GDP quarter-on-quarter figures for the US market, very, very important indeed. Okay, so it's very, very important. They're expecting a contraction of 0.7%. 0.7%. So if those numbers come out the way they are, expect to see further negativity on the US market. But we have a lot out today. Crude oil inventories, very important one for the US market as well, followed by the FOMC statement later this evening at 7 p.m. GMT, which is also very, very, very important. So one to watch. Okay, a lot of news out today, guys. So if you're on trading, rather stand aside, wait for the announcement to come out, then look to see if the direction of the candle or the sentiment in the direction of the overall trend, and then look to target those levels to the up or downside depending, and follow it up with great money management tools. Very, very important. Okay, I'm going to leave you with that. Hope you have a fantastic trading day, and I'll catch you guys first thing tomorrow morning. Until then, you guys trade serenely.